Hey, good afternoon, everyone. We're going to call the Income Tax Subcommittee, the Ways and Means Committee to order. Now that Chairman Blackman graced us with his presence. And first up on the agenda today is House Bill 880 by committee substitute that Chairman Blackman is going to present to the committee. So y'all get some good questions ready. Chairman, what mic are you on?
Why don't you let the others go first, and then I'll just go last, because I've got to be here anyway, Mr. Chairman, if that's okay.
That's fair. That's fair. If
I'm ready.
that's fair. Chairman Martin, you ready? What mic are you at, please?
I've got your quintessential.
4. All right. You can drive that. All right. Chairman Martin.
Thank you, Mr. Chairman. I have House Bill 962 LC 610297. This bill deals with the 529 plans that folks can put money in to save for college. We have one, I think it's called in Georgia, the Path to College Plan. I think we call it the Georgia Pathway Plan sometimes, but I think the name is Path to College. But what the bill seeks to do is take the cap off on lines 19 and 20. There's a $235,000 cap right now in state code. It says per beneficiary, but there's actually a question of if that cap actually aligns with federal law right now. So we suggest that we remove that cap and let the reasonable maximum be determined by the board. There's a board that does this, and they can decide what we allow to go in the Georgia plan. That's the first change. The second change is I thought when I sent out the form I had no opposition. Full disclosure, somebody came to me less than an hour ago, and it seems that the state treasurer is trying to be protective of his monopoly in 529s. But what I'm seeking to do is give the state income tax deduction to a family if they participate in a valid 529 plan anywhere that's approved by the federal government. Because, I mean, if we've heard nothing around here the last few years, it's college debt. We want to, we've got a needs-based program from the governor coming. I mean, we want to try to help people pay for their college. So the suggestion here is to let them have the income tax deduction regardless of what plan and encourage people to do that. I understand when the plan started and it was new, we wanted to give them an advantage because the plan had no money in it, and you wanted to give people reason to invest in the Georgia plan. That plan now has almost $6 billion in it. The fees that are made from the plan are fair, I would say. The plan gets a good return. So this bill just simply allows Georgians to make decisions. It's a consumer choice bill. I think it'll encourage more savings for college. It doesn't change the annual contribution limit. So what you got here is an opportunity to let the board set the limits for the Georgia plan, and then you have the option for people to use a different plan if they choose and let the Georgia plan compete. If it's the best one for a family in Georgia, they can use it. If they want to go with the Utah plan, another one that's run by the state of Utah, it's known to be a stellar plan, they can do that and get the Georgia tax deduction. Just real quick, Mr. Chairman, the difference between getting that deduction and not getting that deduction over an 18-year period, say the child's born, you start doing that. If we force people and they want to invest in a plan and we don't give them the tax benefit because we want to hold them captive in our monopoly, it could cost them $12,000 over the course of an 18-year period at a 5% return. So I just feel like that's a bit unfair. I get why it was done originally. I don't question that. And I don't question the value of our current plan, but I'm willing to let consumers make the choice and suggest we treat everybody equal.
Thank you, Mr. Chairman. I do trust your math on that, but I've just asked the members of the committee if they have any questions. And by the way, to the audience and to the members and to the author of the bill, this is hearing only. All the bills today that have not been heard before are hearing only. First hearing only. So, got any questions? What number?
Just 8.
All right, Representative.
Thank you, Mr. Chair. Thank you, Chair Martin. Just want to make sure. So basically what we're doing is just getting rid of the limit that we have 235,000, just letting someone else make that decision based on letting the board make that decision on what it should be. Is that correct?
Yes, sir. At one time, that's the way it was. The board, they
Where we going
typically set that to the cost of attendance of the most expensive education that you can get in Georgia over a 4-year period. That's what was done in the past. And this is for our plan only. There are plans across the country that have unlimited amounts that go into them, but right now our folks can't use those plans because they don't get the tax deduction if they do.
Any other questions from members of the committee?
I've got a question. I have participated. I have 2 kids that have gone to the University of Georgia and participated in 529. Why do we even have a cap? I mean, is that necessary to even have a cap on what we can invest? Because everybody wants to invest as much as possible, and if you have good investments, you get good returns. And if they don't use it, they could use it for their kids or graduate degrees, what have you.
If it be the wisdom of the committee for us to just remove the cap altogether, I don't object to that. And the reason we place the reasonable language in there is to let the board determine that.
Right.
I believe in the past that was done because there was a tax deduction being given for that. But I would again point out that the way our code reads, it says no additional contributions may be made to a savings account where the total balance of all accounts for a beneficiary equals or exceeds 235. Well, in practice, there's no way to know for a beneficiary, because I could start an account for a child, and the child would be the beneficiary. You could start an account with that same child, and we can check for one plan, but we can't check if there's another one in another state. So in practice, it's I won't say it conflicts with federal law, but it's a little bit different. So I would not object to removing the cap in its entirety, but I'd leave that before the committee for discussion.
All right, we got microphone 8. I'm not sure who that is.
Oh, you didn't turn it on.
Okay.
He didn't turn it on.
All right. So does any members of the committee have further questions? I've got one question, Mr. Chairman. Help me understand on line 29. All right. Going back 24, for taxable years beginning on after January 1st, 2026, an amount equal to the amount of contributions to a qualified tuition program established and maintained by a state or agency or an instrumentality thereof, which is exempt from taxation pursuant to Section 529 of the Internal Revenue Code on behalf of exempt from taxation on behalf of the designated beneficiary, but not exceeding $4,000 per beneficiary. Does that mean they can only don't give $4,000?
No, so that means that's the only tax. That's the limit Georgia would let them reduce their income tax.
Okay, I've got
Yes,
you.
sir. So that was something I have heard that there may be interest in changing that also this year, but I can't represent that today. That's coming from another place in the building here. But and the reason all that language is the language that's being stricken is our account defined in Georgia code. So we're striking that and saying any account approved nationwide, which our account is, our program
Right.
is, as well as many, many more. I mean, Fidelity has them, T. Rowe Price has them, different states have them, and so forth. So we just want to make that a consumer choice bill. And again, what we've heard in this committee, what I've heard in my committee in higher ed, more money that we can allow folks to save is good for us in the long term.
Thank you, Chairman Martin. We do have one person that's signed up to speak against the bill, and it's Bethany Wetzel or Weitzel? Wetzel, for the Office of the State Treasurer. And where's our testimony?
Yeah.
Right here. So, witness mic 1. And for the record in the microphone, if you just tell us who you are and who you're with and what your position on the bill is, please.
Great. Thank you, Chairman. My name is Bethany Wetzel, and I'm with the Office of the State Treasurer. I'm the Treasury Program Director. And I also have Scott Ostison here with me today. He's the Deputy State Treasurer and Chief Investment Officer. One of the privileges I have at working for the Office of the State Treasurer is overseeing Georgia's Higher Education Savings Plan, the programmatic part, and Scott oversees and does oversight for the investment portion. So appreciate the opportunity to speak. Appreciate the recognition that the cap needs to be removed currently. We currently have the lowest maximum account balance limit in the nation, so this is definitely a change that needs to happen. I will speak to the question about whether the cap can be removed. IRS regulations require that it be set, that there be a cap on the amount, and the general language is actually what the language is in the bill right now. It has to be a reasonable amount as determined by the based on current and anticipated education expenses. So that language is very appropriate. We do have concerns about tax parity as how it would affect the Georgia Higher Education Savings Plan and our account holders. Currently, we are able to offer the lowest cost plan in the nation. Our average annual asset-based fee is 9 basis points. The average annual asset-based fee for an advisor-sold plan is 84 basis points. So we are really pleased to be able to offer that and hopefully offer more break points and fee reductions as we grow and get bigger. Another thing is that the plan was specifically created for Georgians in mind. Our focus is Georgians. 91% of our account holders live in Georgia, and every decision that is made by the board is with Georgians in mind. Our board was created with excellent oversight, which was recognized by our ratings agency, Morningstar. We actually have the highest ranking for our parent oversight, and the governor is the chair. We have the chancellor of the Board of Regents, the commissioner of the Technical College System of Georgia. We have the president of the Georgia Student Finance Commission. We have the state auditor, the tax commissioner, and citizen members. And that knowledge of different varying K through 12 and higher education expenses really helps us, and the knowledge of Georgians as well, helps us create a plan that is specifically meant for them. We are concerned that Georgians will be aggressively marketed by advisor-sold plans, and then we'll end up not spending more on a plan because the fees are higher. So for that reason, we are concerned about tax parity, and we're happy to answer any questions that you may have.
Does anyone have questions? Well, I've got one. I'm going to recognize you in a second as the author of the bill. The benefit of and we have a concern for Georgians, but if you allowed this tax benefit to be available to a Georgian using an out-of-state 529 plan, it still benefits the Georgian. And I would guess that it probably more than offsets any extra fees that that Georgian may choose in a plan out of state, would it not? Have you done the math on that?
Yes, sir. I would be specific and say for those people who have accounts now, so say in the Georgia Path to College program, that choose to go to a national program, they would possibly be better off. There are a lot of reasons why they might go. Fidelity might be something that their family advisor uses for other accounts. So I think on a personal basis for individuals, we would agree that there may be reasons, particularly for the higher net worth individuals who would say, my advisor prefers to have a Path to College funds that's with Fidelity or Vanguard or whatever, and it might be easier to roll up. And whatever extra cost there might be of a different fund, because we are the lowest cost in the country, but nonetheless, for an individual, there may be very compelling reasons for them to do that. One of them, by the way, would be the cap, because our cap is the lowest. There may be families that would rather be in a different 529 program because they're limited by the cap. So Section 1, we would totally agree with. By increasing the cap, it would reduce the likelihood that the higher wealth individuals, those with higher limits, higher amounts in their accounts that have reached the limit, they would like to be able to stay in Path to College. Some of them probably stay because of the tax benefit. As we've heard, there are probably some folks who have multiple Path to College accounts, and that is problematic from a record-keeping perspective. So we would agree that raising the cap would be very helpful. Back to your question, Mr. Chairman, about the overall program. When we're talking about the program, we're talking about those folks who are remaining in the program. So if the high net worth individuals and others choose to go to other 529 programs nationally, that's very good for them. But we do have a concern that if the assets under management, which are currently $7 billion, we're one of the fastest growing in terms of both accounts and assets under management in the nation and have been for the last 10 years. If those assets under management go down, it could impact our arrangement with the program manager, and it's a contractual arrangement. Currently, we use TIACREF. There are breakpoints, and every time we reach, so for example, when we reached $7 billion, we went down to a lower breakpoint. So we actually only pay 2 basis points to the program manager. We anticipate that we will continue to grow and get that down to 1 basis point. That's one of the concerns that we've expressed. So we're really talking about those participants who continue to be in the Path to College Fund and those future folks who would like to be in the Georgia Path to College Fund who would be harmed only in the sense that they would not benefit from a reduction in fees based on the assets under management.
But again, I'm going to speak to the fact that it's only Georgia taxpayers making that decision, and they would have the benefit of being able to, and it's their money, and why not let them go wherever they want to at the end of the day? And then we're going to make sure we're running our fund just like everybody else is trying to, perform the best it can. I applaud it. $6 billion is great, and you said 9 basis points gross.
And that includes the fund fees. I apologize. So the actual program fees are 4 basis points, and then we have fund fees. So the different funds have charges, and so what we're giving you is the all-in cost is 9 basis points. And when Path to College funds, when 529C funds are scored, from a cost perspective, they look at both the management fees and also the underlying fund fees. We have excellent funds that also are very low cost, mostly indexed.
And we're the number 1 rated in the nation?
We're the lowest cost.
Lowest cost, but what about performance over time?
So we are meeting benchmarks as far as growth and in performance, and by the organization that rates plans, Morningstar. We are a silver plan. We actually increased our numerical score this year, where we are only 0.08 points from becoming a gold rated plan. So there are currently, I believe, 6 gold rated plans in the nation that have all different fund managers.
Yes, sir, and if I may just make clear that there's nothing that prevents any Georgia resident from going to any 529 plan now. It's just if they don't use the Georgia 529 Path to College Fund, they don't get the benefit of, say, $400 or $800 for the tax. That's all we're talking.
And to the chairman's point, over a given period of time, he just described it could be $12,000 a disadvantage to that Georgia taxpayer whom we're ultimately trying to serve. So
cumulatively, yes.
I'm going to recognize Representative Kelly for a question.
Thank you, Mr. Chairman. Thank y'all for being here. Thank you for the work. Sounds like y'all do good work. I don't think anyone's here disputing that. With y'all, states that offer a state administered plan and the tax benefit that goes along with it, how many of them allow you to also use an outside brokerage?
7 states offer what is called tax parity. Every state in the nation has a direct sold plan. 11 states have no income tax. Not income tax, do not have a deduction either because they have no income tax or because the legislature has not decided to grant that. And then there are only 7 states that offer tax parity, which is what this bill would change to.
How do those 7 states' performance and cost structure compare to y'all's?
So the performance of the growth rates of those states is lower than the performance of our state. I believe our growth rate, our year-over-year growth rate for last year was 13%, and the average over those states with parity was around 8 or 9%.
And cost structure?
So we're the lowest cost plan in the state, in the nation. So of those,
all more expensive.
We're less. So
they're all more expensive.
Yes, correct. Yes, sir.
Okay. Thank you.
Okay. I'm going to recognize Chairman Martin for a question.
Yes. Well, first of all, I want to repeat what Representative Kelly said, if I can. I have no problem with the plan. I have no problem with their cost structure, but I also have no problem with competition. Yeah, and I can give you an example. My plan has been open for my grandchildren for about it's about 6 years. Open, I think when they were 3 or 4, so it's been open about 6 years. It has a cumulative return of 100%. So I could afford to pay a few more basis points because I don't think your cumulative return over the last 6 years has been 100. I'm not saying you're a bad plan, but I'm just saying people ought to be able to choose. That's all I'm trying to do here. And honestly, and we talked earlier, and if you'd have come and talked to me more than 30 minutes, we'd have had a more cordial conversation when I told you, Steve shouldn't have sent you over here. You mentioned the governor was on your board. Your treasurer sent a bill over here a couple of years ago to remove the governor from your board and put the state treasurer on the board. So I worry a little bit about, collecting up a bunch of power and stuff like that. I'm sorry. You're doing a great job, but I am just flabbergasted at why you're bothered by letting parents choose what's best for their investment. I understand he sent you over here. I understand he sent you over here. I wish he would come by my office and explain to me that, because it doesn't make sense to me. Now, I want to get to the numbers, because that's what Chairman Williamson is interested in. What concerns me about this is the opportunity to have that. Of course, you're growing more than tax plans with parity, because you're the only game in town to get the tax reduction. Representative Kelly asked you if you were growing more than them, and I asked you how you compared to them, and you said you were growing more than them. You didn't say your returns were better. They may be, but you didn't say they were. Of course you're growing. I had you at $6 billion. You said $7 billion. That's awesome. Part of that's return, and part of it's because you're the only game in town. And for you to sit there, in my opinion, and talk about enough people leaving this plan to somehow hurt your basis points tells me you're not running a really good plan. Because if that many people want to leave, you don't have a really good plan. Now, I'm going to go let me go the other way. I think you've got a good plan.
Let's take it down a notch now.
No, I am. I'm going back to this. I think you're running a good plan. I don't think you're going to lose a lot of people. So I don't think we're going to hurt you. So I just want consumer choice. I want you guys to do what you're doing for Georgia, and I just want people to have the opportunity to do it elsewhere if they choose. Many people will not.
Thank you, Chairman Martin. Any more questions for members of the committee, Hearing none, this was a first hearing only. Thank you for the input. Thank you for the good job y'all are doing. And thank you for being open-minded and remembering that we're just trying to serve Georgians first. So thank you for the work you're doing.
Thank you.
We're going to have the next bill. We're going to hear House Bill 1070. Representative Hagan, Chairman Hagan. Are you at the witness mic? Okay, that's perfect. Okay.
Does this work?
That's fine. Perfect.
Is it okay for me to be here? This is the first
No, that's fine.
time I've presented in Ways and Means, so
Awesome.
I know you'll have your ways.
Okay.
So just want to make sure I do this correctly. Thank you, Mr. Chairman and members of the committee. Just to clarify, I've got LC 394886. And so the railroad track maintenance tax credit, which only applies to Class 3 railroads, was enacted in 2018 to accelerate rail infrastructure investment and promote economic development, and that is particularly impactful in rural Georgia. We need it because of the high infrastructure costs of maintaining rail. Every mile of rail on a short line costs that railroad from $10 to $22. No, back up. $20,000 per mile annually to maintain that rail. And if they have to install new rail, it's about $3 million currently for every mile that they install. So tax credits needed, in my opinion, and in theirs. But why the short lines are important particularly. And I do chair Rural Development Committee. I do represent a very rural part of the state. The direct economic impact of these railroads is about $10 to $22 per dollar of tax credit they receive. So there's a higher return on investment, but the indirect economic impact is possibly just as important because that's not included in that $10 to $22. But for a community that needs to grow and bring in new investment dollars by way of industry and manufacturing, frequently cannot do that without a short line rail. And so it's highly impactful in many rural communities. Not to mention the growth of our port in Savannah that we know is coming, and these short lines play an important role in moving that freight out of the port into other parts of the state. So what this bill would do, it only applies to Class 3 railroads. It simply extends the current tax credit sunset to 5 years to 2032. And we're also looking to increase the credit per mile from $3,500 to $5,000. And that is the entirety of the bill.
And as I recall, Representative Patty Bentley carried this bill in 2018. And it is, I'm going to take a chairman's moment and say that I know how important short lines are, because many small towns, small businesses would not have access to rail were it not for our short line railroads. That being said, is there any questions from members of the committee? Chairman Carson. Grab one. What's that number?
Chair Lady, thank you for bringing this. I'm just wondering, has there been a fiscal note performed to this, or is it in process?
We have one from OPB, and it is for $6 million. Let me look at here. $6 million approximately annually.
Every fiscal year starting in 27?
That was for this year.
Okay.
That's for this year.
Mr.
I
Chairman,
think I have that right.
I understand. Mr. Chairman, if I may, are there speakers for and against the bill coming up? I was going to ask.
There are.
Okay, thank you.
Okay. Any more questions from members of the committee? Here. Representative Buckner.
I may not be reading this right, but on line 29, it talks about December 30th, 2031, and you mentioned that it would go through 32, and then on 35, it's January 1, 2032, and I'm just wondering if all of these dates are, I'm trying to read quickly and see if they're matching up, or if there's because the year ends on December 31 instead of 30.
I guess we're not working on New Year's Eve.
I don't guess so. I don't guess so. Anyway.
Yeah.
Yeah, but
I can't answer that.
that's a good question, but
I mean, I don't.
those are the established dates. We're just adding 5 years to each one.
Just, I didn't know if they needed to match up.
Chairman Williams, got a question?
No, I'm sorry.
All right. Sorry. How do I make that go off? Okay, we have several speakers signed up to speak for and against the bill. If Justin Strickland signed up, if you come tell us who you're with. Witness microphone right here, please. Just because we're being recorded, if you would, just state your name, who you're with, and your position on the bill. Yes, sir.
Mr. Chairman, thank you. Justin Strickland with Omnitrax, here for House Bill 1070.
Any comments on the bill?
Yes, sir. Excuse me. I'm glad to be here today to share with y'all a little more about short line railroads. Glad to make it here in time today, finding out about this meeting at 10:30 this morning. I had my steel-toed boots on, meeting with a customer who's looking to set up a new operation in Albany, Georgia, where I live, on our railroad to move a lot of heavy products on rail that, in my feeling, should move by rail and not by truck. But they do pave the roads that got me here in about 3 hours today in time for this meeting, so glad to be here and appreciate your time. Omnitrax operates 4 railroads in the state of Georgia. We operate the Georgia and Florida Railway, which originates in Albany. We operate the Fulton County Railway, which is in the city of South Fulton. We operate the Georgia Woodlands Railroad, which is in Washington, Georgia. And we operate the newest short line railroad in Georgia, the Savannah Industrial Transportation Line, which is in Rincon. So a lot of different commodity mixes, a lot of different areas of Georgia where we move products by rail. Omnitrack spent over $11 million last year maintaining rail, and that allows us to provide a safe operating environment for our employees and our customers to receive freight by rail. This tax credit allows for us to provide continual reinvestment in a permanent infrastructure. Rail moves a lot of freight, moves a lot of goods across the great state of Georgia. Serving those customers as a short line rail sometimes can be very marginally thin business for us, but we like to do it safely. We like to do it efficiently. We like to keep trucks off the road, move things that are heavy. Like I said, that I would rather my wife and 16-year-old daughter, who's a new driver this year, not have to drive next to those on the interstate when they're going somewhere.
We have a question from Representative Newton, Chairman Newton.
Thank you, Mr. Chairman. Thank you for your work and your company's work. I do think, as you say, getting these off the trucks. We had a fairly long truck weight discussion a few years ago discussing the pressure on our bridges and our roads and the replacement rates and all. I'm just curious about one thing in line 31. I'm sorry. It is 35, I guess. It's the transferability, the assignability one time. These companies, I guess I've been always more in favor of companies that made a profit in Georgia and needed these income tax reductions themselves. Do you know, are most of these transferred, or do you have an idea, or is it just the excess amounts transferred against versus what income tax the entity may have made or owed in Georgia?
Yes, sir, Mr. Chairman. There are some years where we do transfer the credits. There are some years where we do claim them. Just depends on our income tax liability during that operating year. It's a
narrow margin business.
It is.
All right.
Yes,
thank you.
Do we have any other questions from members of the committee? Chairman Martin.
I don't want to be that guy, but I'm going to ask because it's a tax credit, right?
Yes, sir.
So one of the things that I would, not questioning the value of it, but we're moving the value up and the tax rate down. So the numbers at $3,500 at a 6% income tax rate, that would have gotten rid of income tax on $58,333. That's how much the $3,500 tax, how much tax you would have paid that you don't have to pay because you have $35. Moving it up to $5,000 at 4.99, that number goes to $100,200. Is that what you need in order to make it work for you? You don't have to answer that on the record, but I'm just realize it's almost doubling the effective value of that credit to you, and we want to help the business, but we remember there's a budget crisis. So I won't put you in the spot and ask you to answer that question, but just keeping in mind that because our income tax rate's going down, the credit's infinitely more valuable, as it approaches zero. So I appreciate you, I'm not going to labor any more time with it, maybe catch you offline, but just to make sure we've hit the right spot.
Okay. Any more questions from members of the committee? All right, we got a couple of more people. I think we're going to hear very similar stories, but we're going to call real quickly on Joseph Santoro. So if you can
I'll be
fairly brief.
Well, thank you, Chairman, committee members, for the opportunity to join you today. My name is Joseph Santoro. I'm the Executive Director of the Georgia Transportation Alliance. We are the transportation arm and affiliate of the Georgia Chamber. We have members across the transportation industry, but with today's conversation, just focus on our railroad members, and that includes both Class 1s here in the state, as well as over half of the 26 short line Class 3 railroads in the state. Just to say that we're in full support of this legislation, House Bill 1070. And that, as we know, over the next 25 years, we do a lot of data forecasting. We know the freight tonnage is going to nearly double, if not more, by then. And making sure that these investments and these tools are in place is critically important. So thank you so much.
Thank you. Any questions from members of the committee? Hearing none, we're going to hear from Ben Wright, the Georgia Railroad Association.
Thank you, Mr. Chairman, members of the committee, for allowing me to testify today in support. My name is Ben Wright. I'm with the Georgia Railroad Association. We represent around 26 short line railroads across the state, as well as the 2 Class 1 railroads located in Georgia. And we operate around 1,000 short line railroad miles across the state, and then a little over 3,500 Class 1 miles across the state. We just wanted to sit down here today and give you our support for the legislation. Thank you very much.
Any questions? All right, we're going to hear from Craig Camuso. Craig Camuso. I'm sorry, we've no. Mr. Camuso.
Thank you, Chairman Williams.
Hey.
I'm Craig Camuso. I'm with CSX Transportation. CSX has been mentioned as a Class 1 railroad. We operate about 1,800 miles of track in the state, and again, along with Norfolk Southern, we make up the 2 Class 1 railroads. Here to support the bill. This is not a bill that CSX receives a direct benefit from. However, if you think about the railroad network in Georgia and the 2 Class 1s, think of Norfolk Southern and CSX as the I-85 and I-75 of the state, and the short lines as the exit ramps for the state. We connect with all of our short lines between us and NS, and as was mentioned by Justin, one of the most capital-intensive industries in the nation. So the cost of material continues to rise. The ability, as Representative Hagan said, the ability of these short lines to be able to maintain customers in these rural towns. These short lines were developed. Really, short lines came about from lines that CSX and Norfolk Southern weren't able to really service. So because of these, without the short lines, a lot of these companies would not be in business and a lot of these people would not be employed. So we very much in favor of the bill, and we appreciate your time. Chairman Williamson.
Any questions from members of the committee? All right, Chairman Carson.
Mr. Camuso, thank you for being here. Many times we ask in regard to these tax credits and these deductions and exemptions, if not for this, what would happen? So my question, Craig, was if we did not have this credit, what would happen with these short lines? Would the cost of goods just be more expensive and they would be delivered, or what if we, let's just, and I'm not proposing this to the author, but I'm just saying if the credit were not there at all, right, what would be the impact on these?
I think the impact would be that some of these short lines would shut down because they don't have the ability to invest. I mean, the cost of investment is getting higher and higher each year. And without this, if you look at the stats, the amount of investment that has occurred in the short line industry from 2018 to 2025 has been, I want to say it's increased by about 200%.
What are those maintenance costs? Is it clearing trees? Is it new gravel? Is it new cross ties? All the above?
Yeah, great question. This goes into ballast, gravel, cross ties, new rail.
When you say ballast, I'm sorry.
Ballast is rock that's below the. So you have your rail, you have your cross ties, and then you have the ballast, which is the rock.
Right.
That most of the investment goes into that, but also, and what is become very expensive is the maintenance of bridges. So those bridges cost a pretty penny, especially for the short line community.
Okay.
Any more questions? Again, this was a hearing only, but you did a great job. And Chairman Hagan, I want to thank you for all your work for rural Georgia. You've done yeoman's work, or yo ladies' work, and we appreciate you bringing this measure. It's a proven successful model, and we will have a second hearing on this, I assure you. So thank you. I'm sorry. I'm sorry. Chairman Blackman, do you have a question?
Well, just before Chair Lady Hagan leaves, I think this has probably come up before, but just to remind everybody, I think this was an original recommendation from the Rural Development Council, co-chaired by Chairman Powell and Chairman England from several years ago. So this extends something that they found very important and integral into their rural development plan, I think, from years back.
Yeah, I know for a fact that many small businesses would not even start were it be not for these short line railroads. So we've got to support them at some level because they do have a tremendous impact in the smaller towns. So thank you again. All right. Next we'll hear Chairman Blackman's bill, which is he's got to substitute to House Bill 880. Chairman Blackman.
Thank you. Mr. Chairman, members of the committee, bring before you House Bill 880, which kind of falls in line with what we passed on income tax reform and reduction several years ago. With existing benchmarks, it would take the rate on down in increments of 1/10 of a point to 3.99 from where it currently is. It actually also raises the standard deduction by 3,000 and the dependent deduction by 1,000 in those same divided increments.
Can you point us to the lines on the bill? Point us to the lines on the bill.
The rate reduction on page 2, line 24. And then when you look at what it does for the standard would be on page, the dependent deduction on page 3, starting in line 51, I believe, and then once again for our married down on 65.
Perfect.
And then I think it's single on line 70. And then you'll see the rewrite of what was already in the original legislation. Then on lines 97, you'll see that the senior exemption goes from 65 to 70. And then on the final page, it takes the revenue shortfall reserve fund up to as much as 50% of the previous fiscal year's net revenue, and allowing half of that, enabling, I should say, permissive half of that to be used for taxpayer relief. In a nutshell, that's the bill. There's a couple of supporting letters included. I know we had a fiscal note. David, you're saying that it got misplaced and mislabeled. So, generally speaking, I know what the rate reduction would be, but we can get final numbers. I know this is the first hearing. We'll try to have those locked down by the next hearing if that's acceptable, Mr. Chairman.
And Chairman Blackman, just for clarity's sake, on line 97, you said we were raising from, you said for our senior deduction, you said from 65 to 70. Just want, for clarity's sake, anybody might be watching online, we're talking about from 65, not age, but we're raising it from $65,000 to $70,000. So it would not be true that if this particular line passed and signed by the governor, it would exempt married filing, any couple married filing jointly over 65 years old. It would exempt $140,000 of their
Yeah, it would exclude another $10,000 from income tax.
But in that example, it would be $140,000.
Yes, sir, Mr. Chairman.
Any questions from members of the committee? Representative Buckner.
I had a question about this last time, and it looks like it's changed. On line 78, the governor's revenue estimate for the succeeding fiscal year is not at least 3% above the revenue estimate for the present year. Now, and that was supposed to be one of our trigger points, that we meet that. So what was the situation for us this year with our revenue estimate from the governor?
You'd have to ask the governor. No, I think what we've seen is that the structural surplus is what we've heard with regards to how that rate has been accelerated, if that's what you're referring to.
Right. I mean, because it's in law that we're going to do that, but it seems like we haven't done that the last time or this time.
I think part of it is the taxpayer relief fund as well, as kind of speaks to that a little bit. When you have a surplus and you have a structural surplus in place, and you're able to utilize what is already there to roll back those dollars that belong to the taxpayers to begin with.
Well, I understand that, and I have a problem. I have a problem with it feeling like we're breaking our own rules, our own law.
Well, I think it's just based on the economic success, and
But you understand what I'm saying. We've got in here that this must happen for us to do that, but it didn't happen when we did it last time, and it doesn't look like it's happening this time.
Well, what we don't have in there is that if we have, exceedingly. I'm sorry?
Can we not fix the wording to make it be to reflect what we're really doing?
Well, I guess we could say that if you have a structural surplus in excess of that, that we can roll back taxes any amount, but I think that's relegated to the General Assembly regardless. So people drop bills all the time that cut taxes, so I imagine that's available as tools to us as legislators regardless.
Okay.
But thank you for the question. I mean, as always.
Not really, but okay. Thanks.
All right. So, the chairman has just a quick question. Is it not true that even with the tax cuts, our revenues have continued to rise on income taxes? So, although we cut taxes, individual tax rates, we're still exceeding the revenues year over year. And I understand the lady's question, but the fact of the matter, we got a plan that's prudent, thoughtful. We've enjoyed tremendous economic success, and we're just trying to do the right thing by taxpayers by leaving more money in hardworking Georgia's pockets. Is that not true, Mr. Chairman?
That's true. Again, what I meant by structural surplus, I think, is what we've heard. Yes, sir. And again, I appreciate the work that the Public Policy Foundation, and then we have a letter from the NFIB as well in support. So,
Chairman Martin, did you have a wrap-up question?
I was just going to agree with, I'm going to, of course, agree with our big chairman here. I think when the governor's doing that, what he keys in is when he budgets money from the revenue shortfall fund to give the taxpayer relief, that he may include that in the revenue estimate. That's money we have collected from the taxpayers in a different fiscal year.
Thank you. Any questions from members of the committee? Hearing, I'm sorry, do we have another question? Chairman Carson.
It's not a question. I just wanted to say thank you to the chairman, because the change on line 129, I can tell you from my whole time on appropriations, that's been necessary. Going from 15 to 50% allowed from the prior year's revenue to go into what we affectionately call the rainy day fund. Thank you for making that change.
Thank you, Chairman.
All right, this is hearing only, and in no other further business coming before the Income Tax Subcommittee. This Income Tax Subcommittee of the Ways and Means Committee stands adjourned.
All right.